You might have heard that the economy picks presidents. A lot of people think that what really matters in an election is how people are doing financially, how much stuff costs, and if they feel they are better off than they were 4 years ago. I don't think that's entirely true, but the economy is clearly important. So, who does the economy favor this time? I don't think it's super clear how well the US economy is doing. The picture is very muddy. But we're here to clear that up today, and at the end of the video, I will give you an opinion on who I think the economy is quote unquote picking this year. But before we do that, I want to take you through a lightning round history of the last 10 US elections, just to establish how important the economy is to electoral victory. I promise it will be quick, but feel free to skip ahead if you can't quite stomach that. First, we have 1984 with Mondale versus Reagan. Reagan is seeking re-election in an environment of high growth, about 7.2%, following a recession. Unemployment is high at 7.3%, but declining. The optimistic economic trend helps Reagan win. In 1988, Reagan's VP, George Bush Sr., is running while there's still strong economic growth at about 4.2%. He is the incumbent candidate since he served as Reagan's VP, and he wins. In 1992, Bill Clinton beats Bush Sr. The unemployment problem has gotten worse at 7.4%. Despite a decent recovery, the 1990 recession means that the challenger candidate in this election wins. Clinton then secured re-election in 1996 amid solid economic growth numbers at about 3.8% and falling unemployment at 5.4%. The year 2000 is an exception. Gore is running as an incumbent since he was Clinton's vice president. Growth is pretty steady at 4.1%. Unemployment is low at 4%. The economy is doing really well. But despite this, Al Gore loses. It is worth noting that he wins the popular vote and that the Electoral College vote itself is super contested. Bush wins re-election comfortably in 2004, partly because of a decent recovery from the 2001 recession and growth numbers that are around 3.5%. The 2008 election happens amid the collapse of the US housing market, so this is bad for the continuity candidate, McCain, who is running on a Republican ticket after 8 years of the Bush administration. Unemployment is rising super quickly at 7.3%, and Obama, the challenger, wins. By 2012, when Obama is seeking re-election, the economy is doing a bit better. Unemployment is high at 7.8%, but the recovery is slowly taking hold at around 2% of GDP growth. Obama is able to win this election kind of narrowly, but on a message of continuing the recovery. And I don't think Trump's victory in 2016 was really that much about economics. Growth was kind of low at 1.8%, but so was unemployment. And this isn't really a strong enough economic picture to save Hillary Clinton, who I think overall is just kind of a poor candidate. There are a few things we can take away from all of these elections. The first is that I think the economic argument does hold for the most part. In about 8 of the last 10 elections, GDP growth does seem to be pretty defining, although it's clearly not the only thing that determines who wins an election. The exceptions to this are 2008, where Obama wins despite low growth, but at that point, I suspect voters were happy with 2% because they just come out of a really, really deep recession. The other exception is Al Gore losing, but I mean, as I've mentioned previously, that's a super contested election, so I don't know if it really counts as that clear of a data point. Overall, the incumbent or the continuity candidate almost always seems to win if economic growth is sort of north of 3%, closer to 4%, and if unemployment is trending in the right direction. Even if an unemployment rate is kind of high, like with Obama in 2012 or Reagan in 1984, if the trend is downwards, that does seem to favor the incumbent president because voters view the prospect of the economy getting better and want to continue the trend. On the other hand, rising unemployment harmed incumbents in 1992 and 2008. So the trend, I think, is really important with unemployment. Are there more people who are unemployed today than there were a couple of months ago or a year ago? That seems to be really decisive. Let's get on to what's happening in the US economy right now and to this election, which I know is what everyone actually cares about. I'm going to use this data set here to compare current economic performance to what's going on in previous elections. And we're looking here at the last 20 elections, all the way back to 1944. And we'll also go a bit deeper than this surface level data, but this provides a helpful direct comparison. Green here indicates that a continuity candidate won. So that's either a president seeking re-election, the VP of the previous president, or a member of the same party as the previous president. So like McCain is a continuity candidate following on from George Bush, for example. Red means that the challenger won, and you can see the 2000 election is marked as blue because Al Gore won the popular vote and the electoral vote was contested. Right now, the US economy is growing at 3% GDP growth, and we have a projection from Deloitte that indicates that we will have about 2.7% growth in the year, but I think 3% is a reasonable figure because that represents Q3 to Q3 of 2024. By the time we end this year, the president will already be decided. And as you can see from this data, 3% is a very middle of the road rate of growth for a presidential election. Continuity candidates tend to win consistently once GDP growth exceeds 3.8%. And some of the exceptions in that group, like you can see the 2000 election, that doesn't really hold up, I think, as an example of a high growth win. But aside from that, there's kind of a limited number of exceptions above 3.8%. And we're right on the cusp of getting into that north of 3.8% category, but we're not in the category, right? We are below it. GDP growth of less than 2%, on the other hand, seems to be pretty fatal for continuity candidates. We're not near 2%, but I would say that the current 3% rate of GDP growth doesn't clearly push the election either way. I think it's the perfect kind of GDP growth where an election is a pretty fair contest between two candidates. If the economy is doing really, really badly, the continuity candidate's really going to struggle to succeed. If it's really growing, continuity candidate has a really good chance of winning. This is the middle position. It's not super strong either way. However, when we get into some of these other numbers, things start to look a little bit more positive for Kamala Harris. Unemployment figures look much better for Kamala. Unemployment in September of 2024 was 4.1%, down from 4.3% in July. However, in 2023, unemployment rose from 3.4% in January to 3.7% in December. So this suggests that while there's a short-term trend of decreasing unemployment, since April of 2022, the trend has been very slightly upwards, although pretty stable unemployment figures. I don't think the average person will have noticed the difference. The data shows that the current unemployment rate is kind of exactly what we would expect to see in an election where the continuity candidate wins. Those higher unemployment rates, north of 6%, are extremely damaging to continuity candidates, and we are way below those. There are only two modern US elections where a continuity candidate has lost with better unemployment numbers than we currently have. Also, the trend in unemployment mattered a lot in previous elections, with declining unemployment being key to victories for continuity candidates, and unemployment has been quite stable. So I wouldn't say this is a super decisive situation where unemployment data is trending better, but it's currently at a very stable, positive position for Kamala Harris. When we turn to inflation, the picture gets a lot less clear. At face value, 2.4% inflation is as close to perfect as you could possibly get. You really want to be right in the middle of this chart. Really high inflation is obviously bad because stuff gets more expensive, but so is really low inflation, which is generally associated with like periods of low economic growth or recessions. So those sort of red elections at the bottom, those are often situations where things are going really badly wrong in other areas of the economy. And the fact that current inflation is so reasonable is a massive boost for Kamala. But obviously, this comes in the context that we've had horrible inflation for a lot of the Biden presidency, peaking at 9.1% in June of 2020. And the challenge for the Harris campaign is that while it's quite unreasonable to expect prices to come down, it takes a while for consumers to get used to higher prices and consider them quote unquote normal. The perspective of the average voter will be that things are too expensive and that they're worse off than they used to be. So overall, I think even though the inflation numbers at first glance are quite good, this is a negative for Harris. And I think the positive trend prevents this from being a really decisive issue. If we were having the election 2 years ago where inflation was super high, I would say like that would be a slam dunk for Trump. If we were dealing with like 8% inflation at the moment, I don't think there would really be a question about who is winning the election. But right now, I would say the fact that inflation has stabilized and hit a really good level, and also you have other things like the Federal Reserve reducing interest rates, which will sort of speed up economic growth, and that's kind of taking the brakes off the economy a bit, having like stabilized to a position where inflation is lower. I think that we're in a position where inflation isn't as much of an issue as maybe it otherwise would have been. Another counterpoint to this inflation argument is that wage growth is decent. We're at 6.3% at the moment, which is very middle of the pack, as you can see. This is right around the kind of wage group that it is good for a continuity candidate. Obviously, higher is better, but this is a very solid rate. And it's a particularly effective counterpoint to inflation because if wages are going up at the same time prices are going up, they make the increasing prices feel less painful, even though people will still be annoyed that they're paying more for things. And some of these like really high rates of wage growth where candidates are losing in like 1980, 1976, 1968. Those are situations where you have extremely high inflation as well. So that's kind of a not a situation where you're just looking at wage growth, you're also looking at prices going up, and that's probably why those candidates lost. The current situation is very favorable wage growth to inflation ratio. You want wages to be growing faster than prices, and that's what's currently happening. Also, in the same way that sort of currently low inflation rates have the context of high inflation during the Biden presidency, wages were growing a ton when inflation was high. So wage growth, I think, goes a long way to reducing the importance of higher prices in this election. Overall, I would say this is an economic environment that very slightly favors Harris. The economy is hitting the right sort of numbers for a continuity candidate to do well. And I know that public sentiment about the economy in the US is poor. There have been lots of opinion polls about people being dissatisfied with the economy and people feeling like they're worse off than they were before. And for me, this feels a lot like Obama's re-election in 2008 or Bush in 2004, where the economy is coming out of a rough spell. The economy right now is emerging from a really, really poor period. The Federal Reserve is lowering interest rates, and even though voters are understandably unhappy about the economy, I think there are the green shoots of improvement, and we are clearly past the worst of the economic situation. In those kinds of economic environments, voters tend to not want to mess things up by chopping and changing political leaders, and they tend to deliver narrow victories for continuity candidates. That's not a prediction, right? Because obviously this election is about much more than the economy. But I do think Kamala Harris is a good enough economic environment that she has a very real chance of winning. And I would say even the economy slightly favors her.